11, 12, 13. Are you guys ready to rock in this weekly 13 market moves market prediction show for next week? We're going to show you some insane stuff that will absolutely blow your mind if you're a day trader or a swing trader. Here's the exciting part of this video, guys. For those of you that are the students of the market, are really trying to understand how do things work, how are things correlated, what's coming next. Before they're going to talk about this in the news, we're going to break it down to you here first on 13 market moves, guys. For those of you that are new, or for those of you maybe, well, I only trade on fundamentals, I don't believe in historic analogs. Guys, some of the biggest fortunes in the market, including the one that was put together by Paul Tudor Jones in 1987. For those of you that may not be aware of the situation, is he used the 1929 historic analog to actually predict the 1987 crash almost down to a week. And in this video, we're going to try to attempt to do what even Paul Tudor Jones have never been able to do, and that is predict the crash down to a day, literally within a 48-hour time frame. I'm going to show you, based on the historic analog, the very closest historic analog that we've been able to dig out in the last 5 years. It's got an insane match with the current market conditions. So grab a pen and paper, pay very close attention to what we're about to show you, because this could take you from an average soldier into a general of trading. Get ready to go to the Super Bowl of trading. With this chart, I'm about to show you the most important chart for 2021 that you should be paying attention to right now if you're a day trader or a swing trader. Okay, first chart I want you to pay attention to right here, and try to stay with me, try to follow me slide after slide. So this is the chart of Bitcoin December 2017. What do you see? Well, Leo, it's going to the moon. What do you mean? What do I see? Damn right it's going to the moon. Okay, just like it was going to the moon recently, until you know what the hell happened. So let me take you to the second chart. This will be the chart of December 2017 of the general markets. I'm going to use S&P 500 for illustration, but the rest of the charts, if you were to use Dow Jones or NASDAQ, they look pretty identical to this one right here. So what we've got is a chart of S&P 500 dating back to January 26, 2018. What do you see? Leo, it looks like it's going to the moon. What do you mean? What do you see? I see nothing but bulls, 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 bulls everywhere. Everybody is a bull. I know. I posted some videos right around that time saying the market was going to crash, and I got a lot of crazy comments. Guys, as a matter of fact, I would like for you to leave as many negative comments on this video as possible, because if I'm not getting enough negative comments, okay, I'm actually going to be slightly concerned, and I'll explain later in the video why. So here's the chart of S&P 500, end of January 2018. So pretty much identical, right? You've got Bitcoin chart. Now pay attention, because there's slight differentiation here in the time frame. This is December 16th, 2017 in Bitcoin, where it hits the top. This is a month later. I specified a month later, the general markets are right here, which turns out to be the top, as you're going to see just shortly after here. This is what happens to BTC. Now, this was the point of the chart in BTC I just shown you briefly a second ago. This is what happens to BTC by March. Now, more importantly is to focus what happens to Bitcoin between December 16th and early February. It goes from 20K to 6K. It's it. The fashion in which it does so is what has exact relevance to the current situation. So we're going to actually break it down very thoroughly in just a second, but just bear with me. What I'm trying to show you so far is basically Bitcoin tops in December, market tops in January. This is the picture what happens to S&P 500 next. So this was the point on the previous chart. As you can see, what happens next is about a 13% drop, or in terms of points, it was about a 400% drop. Now, you're going to say, well, what's the big deal? They bought the dip anyway. I get, if you're a bull and you want to stay the bull forever, that's fine. Probably you're not even a trader. But this is a video for those that love to trade. And what I'm trying to show you here is the greatest opportunities. They're always on the short side, not on the bull side. Why? Because if you're utilizing short-term options, okay, you're always going to be better off on the short side. Look at how magnificent this drop is. Look, we dropped 400 points within how long? Within 9 trading days, guys. 13% drop within 9 trading days. Now notice, not without bounces, right? Look at this big white candle right here in the middle before even a further drop comes. So not without bounces, but within 9 days, the markets lose 13%. Not a big deal. Huge, huge deal, guys, from the standpoint of trading weekly options. Huge deal. Very huge move within a very limited amount of time. That's what makes you 1,000, 2,000, 3,000% returns if you position yourself right before this happens. Now, clearly, it's a lot easier to go out there and watch through. Everybody's going to say, well, if the market dips, I'm just going to buy it. Yeah, and the question is, where are they going to buy it? They're going to buy it on the first dip? They buy it on the second? On the third? By the time they're done buying the dip, okay, the count is gone. So be ready, because I'm about to show you how you guys can make a killing. This is not this complex. I mean, even if you're a permanent bull, you can pull this trade off, okay? And hey, who knows? Maybe after this, you may just turn into a bear after seeing how much money you can actually make shorting these type of situations in the market. But that's certainly what put Paul Tudor Jones on the map back in 1987. This is how he made hundreds of millions back then, which of course in today's money is billions of dollars. So this is the kind of opportunity that's in front of us, and it's coming lightning fast. I'm actually going to specify exactly when this type of move in the market is about to take place. Now, before we go there, let's review something very, very important right here, and this is the chart of Bitcoin. Now, Bitcoin right here, guys, as you can see pointed out in the prior chart, it tops right here, it drops, it pops, it bounces, right? It drops again, goes sideways. Basically, Bitcoin within that time frame, the time frame from when Bitcoin touches 20K to January 27th. January 27th, this is when the market begins to crash. Bitcoin loses roughly 50%. Okay, so the main point that I'm trying to illustrate so far, very slowly, is Bitcoin drops 50%, the market continues. While Bitcoin is dropping and losing 50% of its value, the market continues moving higher. Now, this next chart illustrates exactly what I have just shown you on all the other charts. So pay very close attention, because I'm going to break down things day by day here. Okay, so Bitcoin tops right here, it drops, it bounces twice, it comes down here. Last video we posted on Bitcoin was saying, hey, it's going to hit 27,000. I posted the video. Bitcoin drops another 3,000 points from the time I posted the video. So it hits a low of 30,900 and it stalls out. As we predicted in that video, we didn't get the 27,000 figure correctly, but we predicted that Bitcoin was going to set a low. And while a lot of people in the markets were still saying, hey, it's about to crash all the way to 20,000. The main point of the video was to show you, yes, there was going to be a bigger drop in Bitcoin, but it was not going to be as extensive as most of the market participants expected. And specifically, we pointed out in that last video that Bitcoin was going to bounce. And so right now, if we're to calculate this historic analog day by day, this low in Bitcoin of 30,900 was on June the 8th. At this point, we are, right now, I'm recording this on June 11th, and so tomorrow we're going to have June 12th. And so for those of you that are skeptical whether this historic analog has any validity or any precision, we're going to test it really nicely over the course of the next few days. So basically, after this strong bounce in Bitcoin for the last 4 days, we got almost a perfect match. Not a perfect match from the standpoint of the size of the candles, but the overall general move, okay, in the last 4 days is pretty much identical to the move that we see here in the historic analog dating back to January 15th, 16th, 17th, 18th. And so I've got number 12 right here representing that tomorrow on Saturday we should have a move lower in Bitcoin that could last for as long as 2 days. Then we're going to go sideways. We're going to have another last bounce. Mark your calendars. Last bounce in Bitcoin before it collapses one more time. And so at that point, we're on track. Based off this number, 30,900, we can easily hit Bitcoin at 25 to 27K. When? That's the most important question. When, guys? I know it's wild. It's wild. So we got 5 more trading days in the market. So it's Friday, June 11th, the market closed. We're going to open up next week. So we're losing 2 trading days in the market, but Bitcoin trades 24/7, right? So each candle here represents pretty much every day. So we're going to have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. We've got 15 days from today when Bitcoin hits the low. We got 5 days till Bitcoin begins to drop crazily, just like we've seen it drop from 58K down to 30K, bounce to 40K, back down to 30,900. This is another type of situation that we've got coming on Bitcoin. Now, notice I've got numbers here, 19 and 20. 19 and 20 is the last day in Bitcoin higher is going to be June 19th, and it's going to begin that colossal drop, which consists of consecutive red candles back to back. It begins that drop on the 20th. So mark your calendars. This is the time you want to put on your short position on BTC. All right, you can quickly catch some decent sized moves over the next 48 hours. It's going to go sideways. I'd stay out of that trade. I'd focus on the market, trade the markets, and then I'd go and short, put on a big short right here, guys. This is a big short type circumstance based on the historic analogs. I would not want anybody to miss this crazy opportunity right here. Okay, so for those of you that don't care about the Bitcoin, I just want you to take the most important aspect out of this chart, and Bitcoin has been a leading indicator of what the general market was going to do next. So the most crucial aspect, if you're an options trader or you trade the markets that you can derive from this chart right here, is Bitcoin is going to top, go sideways on top again, make that next bounce stop, which is going to be a consecutive series of lower highs on BTC. At the same moment, the market is going to top. So based on this chart, if we're to evaluate this data, the market top is going to be next Friday on the 18th, okay, and the following Monday on the 21st. This is where the market could begin crashing. Yes, and I forgot to mention, I've shown this chart many times, but the blue and red is the action, price action of Bitcoin. The light green and orange here is S&P 500 overlaid over Bitcoin price action. So that's why I've got numbers 18 and 21 right here, meaning on June 18th, this should coincide with the last move higher in the market. It doesn't necessarily even have to be this nice green candle like we've had back in January of 2018. It could be a smaller candle, but the bottom line, it should coincide with the top in the market. It could be Thursday next week. It could be the 18th Friday next week. And so be ready. Shortly after that, we could be going into consecutive series of drops. So first, as you can see, people are going to be like, well, hey, we're just dropping a little bit, not a big deal. Okay, and we actually stalled for a couple of days. So we get a decent sized move, a gap down, we stalled for a few days, and this is where the bigger drop comes. So everybody's going to be buying the dip right here. They're going to get killed just like it got killed on, in January, early February of 2018. Now, notice this crash does not last for a very long time. It only is there for 9 trading days, and it's not without the bounces, guys. You got one sideways pattern right here, a little bit of a green action candle right here. You've got another huge red candle right here, which I've shown you on the stock charts. It was like a huge white candle. So not without bounces, okay? But overall, the move does not stop until when? Okay, until 3 days after Bitcoin sets a low. So when Bitcoin bottoms, you count 3 days, and this is where the market is going to bottom. So this is how precise this historic analog could actually be. Now, I'm going to show you, I'm going to throw in one crazy chart pattern, which nobody knows about besides some of our students that we work with for private coaching, but we call it the crazy 13 market moves tornado pattern. And these tornado patterns, they're highly, highly precise, guys. I would say these tornado patterns are about 90% accurate. So I'm going to take you back to the crazy days of, and we're going to have a Santa Claus rally in December of 2018. That's what all the analysts expect when we get this crazy drop. Now, preceding to this drop, we have this pattern that we call the crazy 13 market moves tornado pattern. So it begins with a smaller drop, bounce, everybody's happy. We drop again, Everybody's buy the dip. Hey, everything's good. Hey, don't forget about the Santa Claus rally. It's coming up. So we drop again. Everybody's buy the dip. Oh, yeah, I told you, buying the dip works. Oh, it works beautifully. Hey, let's buy some more. We're going to the moon. It looks like we're about to break out and go to the moon. And then this happens. And you'll be like, what the hell is this? Well, this is when the market crashes. So the tornado pattern should resemble this right here. So it's initial smaller drop. Everybody's happy. Nobody's panicking yet. Okay, we bounce, we drop, we bounce the drop, we bounce, and notice right here, the last point of the bounce is just slightly lower than the prior high right here. So we got to get this right here. So this is the top on the second bounce, and this top right here is just slightly lower than this top right here. And then we get a huge, huge crash. So understand this, that this is a pattern. You can observe this pattern in daily trading. You can observe this pattern in weekly. You can observe this in your intraday on 1 day, 1 minute chart, 3 day, 3 minute chart, 5 day, 5 minute chart. If you see this pattern right here and you see this lower high right here, guys, this is a 90% bear. And so if you want to print this out, study this, this is going to help you nail some killer entries. And so I'm going to demonstrate how does this pattern actually apply to current market conditions right now. So this is what we've got. Bitcoin. Can you identify this pattern, guys? Can you identify this pattern in Bitcoin? And maybe one other thing that I didn't mention on the other slide that is highly critical here. So here's your tornado pattern right here in BTC. Okay, bounce once, bounce twice. Okay, and here's the last bounce. And what did I say about the last bounce? This last bounce is a lower high in relation to this bounce. So you've got drop, bounce, drop, bounce, drop, bounce. This bounce is not as high as this bounce. You get a 50% crash in Bitcoin. And for those of you that missed it, we did predict it on all of these bounces. We said, look, Bitcoin is about to crash. The video is on our channel, and we've called it How to Double Your Bitcoin Holdings Without Using a Dime. You could have converted your Bitcoin you were holding right here, went short. Guys, even if you used no leverage, zero leverage, you would have doubled your Bitcoin holdings. If you use like a 10x, a 20x, guys, I know some guys within our group that hit 30, 50 BTC on this trade with just utilizing the 10x leverage. So crazy stuff. If you missed it, congratulations. You now know that you've got another tornado pattern right here. So here's your bounce, here's your drop, here's your bounce, here's your drop, here's your bounce. Oh my God, are you serious, Leo? I see it now. This low right here, this is a lower high in relation to this lower high. This is a tornado. Holy shit. Leonardo, this is a double tornado. Double tornado pattern. Damn it. What happens next? Well, guys, I can give you about a 90% probability what happens next, okay, overall in the next 14 days, we're going to see a much lower Bitcoin. And I'm saying it with good intent, so you guys can load up on more Bitcoin. But a sure way to do it is to short Bitcoin. I pointed out specifically on the calendar. I'm going to review it one more time for you on when you should pull the trigger on this. So the tornado pattern, again, guys, it is as strong as death, okay? And at this point, I think, based on the historic analog, Bitcoin can do very little, despite of the headlines. It doesn't matter what you see in the headlines. Just focus on this tornado pattern, okay? Focus on what Bitcoin generally does, or for that matter, pull up any chart. If you can identify a tornado pattern, things generally collapse. So at this point, we can expect BTC to 25, 27K, possibly 23. I mean, but it's basically, guys, it's a large enough move. If we drop from 37 to 27, from 37 to, 25, that's a killer opportunity. I mean, you can double your Bitcoin on using like 5x leverage. I mean, you can triple it, quadruple it. Okay, so the question of the day is, where are we right now based on the historic analog on the BTC? And so if we look at 2017 when Bitcoin dropped from 20K to 6K, well, we're right here. We're right here at 37K. So this point in the chart of BTC dating to December 2017, January 2018, we would be on January right here about January 16th. And as you can see on this chart, we have a small drop coming followed by a last bounce. Call this the last bounce in Bitcoin before it makes a huge move lower. Now clearly there's bounces after that, and we'll get to that part and we'll nail the bottom in it when it happens. But guys, this is where we are right here. 37, 38K. This is the point on this historic chart right here. As you can see, a drop, a bounce, and a bigger drop. That's what's fixing to happen before we bounce further. And so pay very close attention to that. Now, where are we as far as the historic analog on the chart of S&P 500? Guys, this is a shocker. This is a shocker. If maybe you were falling asleep while explaining the bigger charts earlier, wake up! Because I'm telling you, we're 5 days away from a collapse in the market, based off a historic collapse in 2017-18. It literally happened at the very end of January, but the drop was colossal, as you can see from the chart. You don't have to be a rocket scientist to see, damn, did things drop. And it was a 13% drop. Now, it's lightning fast, okay? Look at all this time. Look at how bullish the chart was here. Look at how bullish things were here, guys. And so, if we were to put a number on where we are, today we closed at 42.47. So this would be represented by this moment. We got 5 more candles to go. As you can see, some of these candles, they don't necessarily have to be 100% bullish. And the last candle before the drop on Friday, we could spike higher, finish slightly lower, but this could be the beginning. This would be the 18th of June. This could be the 18th of June, guys. So we got 5 more trading days until the market could absolutely collapse right here. So 5 days away from the collapse. And the question is, okay, I mean, this is where we finished today. The collapse is coming. Do you know how to trade it? That's the most important question. I mean, you can sit here, you can post comments, you can, you know, talk to your friends about it, you can argue, you know, you can do whatever you want. But the question is, okay, when you're going to wake up at the end of June, are you going to look back at this video and you're going to be like, God damn it, 13 market moves, got it right again, okay? And clearly we don't get everything right, but it all boils down to your entries and exits, guys. And, you know, why is some trader that we've got this week, why is he up 240K and I've got some guys that are down 20K? Okay, it's just a matter of entries and exits. It's about a matter of how do you allocate capital to certain trades. So our goal is to help you. And if you'd like to take advantage of this information that I have put together in a few slides here for you, you don't have the specifics here of exactly which stocks to short. You don't necessarily just want to go and short the hell out of S&P 500. If you do, you want to know which strike prices to use. Okay, you want to know the details, the expirations that are going to make you the most amount of money. You've got to know all of these details to put on these trades. And so, if you have any questions about this, I strongly recommend, guys, we're going to be bombarded with calls over the weekend. I wanted to post this video ahead of time so I don't have to do it last moment next Friday. I wanted to make sure everybody had plenty of time to watch this video. And if you have any questions about this, I strongly encourage you to schedule a 20-minute call so you wouldn't be taking this trade solely on your own. Okay, get one of the senior coaches to help you out here at 13 Market Moves, guys. In order to do that, you can go to 13marketmoves.com or click the link below this video. Also, if you're interested in trading Bitcoin, shorting Bitcoin, there is a referral link below this video that gives you access to reduced commissions, ton of bonuses, and our private group bonuses for our 13 Market Moves with BIB. So click that link below, guys. Get signed up and get ready to rock. Don't forget, 13 Market Moves historic analog points to a major market downturn between the 18th and the 21st of June 2021. And don't forget where you heard it first. 13 Market Moves, baby. Let's roll. Make it happen, guys. I'll catch you in the next video soon. Let's roll. Guys, let me break down some of the easiest trades that our paying members have been able to take with us this week. Let's take a look at GME. Guys, one of the easiest trades this week was not GME calls, damn it. It was GME puts. Does this look like a drop? Or does this look like a drop and a half? Damn it, this looks like a 10x drop, which was exactly how much these options were paying, guys, This was a 10-to-1 trade right here in a 245, 250 strike put over the course of a day, in one day. And the question is, did you make a 10x trade on GME puts this week? And I'll tell you, 99% of you will say no. Why? Because you got out when the damn thing dropped 10 bucks. And you know it's true. So click the link below, get educated on how you can stay longer with your trade so you can lock bigger gains. Now, I know we've gotten a lot of bullshit on the last video about the GMA crash, but hey, search and market moves don't lie. Here's the crash right in front of your eyes. So learn the chart so you can catch crazy moves like this. Now, the most interesting aspect about GME this week is the fact that we started sending out the alert to short GME when it was above 300 bucks, which was exactly, if you're working with a coach, they would have informed you to short it right here, to short it right here. Now, some of the options, the way they were priced, okay, if you got into the trades right here at the very top, they wouldn't have made you as much money. I mean, they would still be in about a 5x trade, but the trade that really got you paid was getting in, okay, at the market open the following day after the earnings announcement. And so we have a special course, as you know, Trade Like a Rockstar. It's about nothing but how to trade earnings, guys. Earnings season is just around the corner. It's going to be here in just a few weeks. So make sure, if you want to understand how to capture trades like this with big moves, okay, this right here on the entry was a 10x trade right here, guys. From 270 where we opened all the way down to 212. And today we hit 206, guys. Not very far off the target. We've given you at about 190 bucks on GME. Now, this was a given and this wasn't easy. The bubble is popping. No matter what they talk about in the news, have your own brain. Learn how to do your own entries and exits on these things, guys. All right, next chart for the day. Now, this one is going to be a shocker, guys. It's going to be a shocker because the level of precision that we were able to nail this trade was absolutely phenomenal. So here it is. BIB, we've been talking about this trade since Friday. And what did we say? Hey, this could have gone straight higher by 100, 120 bucks. Ended up being a $160 move at one point. If you were part of the alert group, you would have known right here. We actually told you specifically right here to short it, guys. No, not when this thing was moving to the moon at a speed of light. Plus 160 bucks a day, we told you to short the bounces, guys. This is what makes you the most money. So from here, what you could have done is bought the 405 strike puts. Absolutely right. You couldn't have even bought 450s. They weren't even on the option chain. The only thing you could have done is bought 405, 400 strike puts. Now, this was a 5x trade, literally, okay, within the course of the day. Now, you know, the next day would drop a little bit more. So it got into be even a slightly better trade, like a 6x trade. But what's important is to understand we told you to buy calls right here to capitalize on this move higher in the stock. And there's some proprietary tools we use to nail that trade, that part of the trade right here. And guess what? Today we told you to short the hell out of it right around here, guys. Now, guess which one of these trades paid the most? Guys, this one I said made about 5, 6x right here. This one around here, guys, was about 4x trade. This trade today on BIB puts, guys, depending on what strike and depending on your entry, paid as much as 12x. BIB, now every entry, every exit on this thing, guys. Let's rock. Search and market move. Now, this wasn't even the best trade, guys. You thought 12x was good. You thought 10x was good. Damn it. Check out. This is the trade of the week right here. Now, we've told you. Hey, a lot of you is going to be a shocker. Damn it, Leonardo. I didn't know you trade calls. Woo! As you know, for a while, we've been bearish on Zoom, and we see certain key patterns in the chart. There's a time to begin to be a bull. There's clear, strong accumulation by institutional investors, which we expect to proceed next week into next week of trading. But our entry right here, we send you a text message in our alert group to start getting in on these calls right here, guys. Zoom calls right here at about 340, 344 level. These were the initial entries. Now, at that moment, the 350 strike, which we're recommended to buy, they were sold for $1. You could have gotten in for $1 in this trade. Today, We're cashing some of our members for as much as 18 bucks. This is an 18x trade, guys. And if you missed it, there's only one conclusion. You've got to take action. You've got to sign up. You've got to understand how to put these trades together. You can't afford to be missing out on an 18x trade. Guys, that's 5K turned into 90K. That's 10K turned into 180K. Congratulations to our members who took advantage of this and had a sweet payday. Now, if you maybe took the Zoom call, but you made $1,000 bucks, guys, you're getting out too early. You're not trying to focus on a bigger move.